Thank you for tuning into the Canada Startups video series as we discuss the different types of government funding options in Canada. As a small business, getting started has never been easier with the amount of funding that the Canadian government is funneling towards business ownership. So it's time to get you some of that funding. But first, let's get you familiar with the different types of government funding options in Canada. Let's get started. There are over 1,500 different government funding programs across Canada. These programs come from various levels of the government: the local, provincial, and the federal government. The funds come in the form of government grants, government loans, tax breaks, or tax credits. Knowing what's available, the best options for your business, and how to make the best choice is where most people have trouble with. We are here to help and break the different types of funding down. A government grant is often the most sought-after type of funding. Most people consider it free money. You may have heard about grants before, referred to in other popular terms as shown here. But government grants, for the most part, are contributions made by the government agency to help you as a small business with a specific purpose. Most government grant agencies provide this type of funding in hopes that you, as the business owner, will succeed, create jobs, pay taxes, and so on. This ultimately creates a revenue stream for the economy and starts the process over and over again for other entrepreneurs across the country. While there are different types of grant funding programs, the most common types are the non-repayable grants, the one-time or renewable grants, and the partial contributions. Let's review each. Non-repayable government grants are exactly as they sound: not repayable. This means that the money you get from the government agency is to be used towards your business expenses with no requirement to pay the funds back, making this the free money that every business wants. Not everyone is eligible, and the grants are not always for every type of expense. Those that are covered benefit the most. Then we have the one-time or renewable grants are extremely helpful and can often be used and reused over and over again. These types of grants often cover expenses requiring multiple payments over a period of time, like hiring of staff or providing training, making improvements, and such. For the one-time option, the grant is often given once to a small business to use towards the needed purpose, while the renewable grant options may be provided multiple times over a period of a year to help the business continue to grow. Lastly, the partial contributions, while still considered free money, they are often the option that many business owners shy away from. Being considered partial means that the government will only fund you a part of the total amount needed, and you, as the small business owner, have to come up with the rest. The money you get is still non-repayable and free, but as a startup, it may be difficult to come up with the cash to match. No matter the grant options, all three are super beneficial to a business owner starting out or expanding. While they are extremely competitive, getting your hands on a grant will help your business succeed. If you are considering a government loan as a form of funding from one of the agencies, there are plenty of options available. Not all loans are the same, but in most cases, government loans are often better rated than any private bank loan. This means they will likely have better terms, better interest rates, better conditions, and ultimately be more on the side of helping you succeed as a business, rather than focusing on just the interest. There are four main types of government loans. The no-interest loans are often the best. They are the most desired options, as they are traditional loans, however have no interest attached. This means you pay back the required amount without having to pay extra on any interest payments. The benefit of this is that the amount you borrow is the amount you pay back. Next, we have the low-interest loans. Much like traditional bank loans, these loan types allow you borrow the needed funds, use them towards your business, and pay back the used amount with the interest attached. The interest is often lower than any bank loan, making it a favorable type of funding to consider. The next option would be the guaranteed loans. These are an excellent choice if you are eligible. This is where the government agency acts like a co-signer on your loan. If things don't go as planned with your business, the guaranteed portion of the funds becomes the responsibility of the funding agency and not you directly. This can often cover as much as 85% of the loan. However, keep in mind that this depends on the program you apply for, and not all programs are the same. Lastly, the conditionally repayable loans are those where there are specific conditions placed on the loan you borrow. These can often be favorable for business and are negotiable. Some conditions can include not having any interest, or paying the funds back after you hit a certain milestone, or making the loan repayment date longer. No matter the loan type you choose, be sure that you fully understand the risk of borrowing money. The tax benefits that come from the various government sources are often very neglected when it comes to them being considered as funding options. The reason being that in order to qualify or get any funding via this method, you have to have spent the money already. The tax breaks are often the better of the two options, as the tax breaks can be applied at the end of the year, giving you sort of a discount or a refund towards certain expenses that you had within the year. This is especially true if the government has a specific focus that they want to see improve over the year. Allowing for more tax options means more money in your pocket. Next, the tax credits, much like the tax breaks, are credits that are given back in the form of a refund as well. These are often available to cover more types of expenses, often having to do with renovations, going green, technology improvements, and such. Again, these are excellent options, and you might as well take advantage of them, since you may have already spent the money. Be sure to work with your accountant or tax professional to not miss out on these options, as they are still considered a form of free money. Now, the hardest part of it all. You know about the grants, the government loans, the tax options. But what is the best option for your business? A few ways to figure that out, but the best method is to work it backwards and see what is available. Sometimes you can't pick and choose. You may have to work with what is available based on your specific business model, the location you are in, and based on your specific funding needs. Working with an expert or using tools such as the funding database as seen here and offered by Canada Startups will be of great help in narrowing down the options. That's all for this one, but be sure to check the next video in the series as we look at the different steps to actually get you funded.